Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello and welcome to another edition of the Grain Feed, brought to you by EverAg. This is your weekly news feed for all things grain and all things feed. Each week we bring you updates on the markets with unique perspectives from an amazing team of analysts with the intention of helping dairy and livestock producers manage their risk. I'm your host, Jim Matthews from Chicago, on another hot Thursday morning. It might be summer today. Jake, is today summer?
I think so.
Is this an equinox, Jake?
It's a summer solstice.
It's a solstice. Welcome to the solstice, viewers of the Grain Feed. Joining me today on this solstice from Kansas, Director of Feed Procurement, Mr. Jake Kingsley, and making her first appearance on the Grain Feed from Fresno, California, from the feed team here at EverAg. She puts the gold in the Golden State. Miss Natalie McCarty, team. How are we today?
Good. How are you?
I'm doing very well this morning, Jim.
Doing excellent. Excellent. Jake, how are things in Kansas?
Pretty good. A little warm here, but we caught a very healthy rain yesterday.
Very nice. Okay, good to hear. Good to hear. Natalie, how are things in California?
Good. It's always hot in California.
It's always hot in California. Things are trending in the right direction as we enter this solstice. This summer solstice. Thank you for clearing that up for us, Jake. Guys, we have a lot to run through, but maybe Natalie first, real quick. You joined the feed division here at EverAg a couple months ago. Would you mind giving the viewers and listeners a quick elevator pitch about yourself?
Absolutely. So I have been out here in California for quite a few years. I have 25 plus years of experience in the grain and feed markets, worked all different levels from the export markets, grain markets, all the way to processing, and then worked with some ingredients and then jumped back into feed. My last position I was at, I did a lot with rail logistics. And so real familiar with freight rates and how things get from here to there.
Okay, I think we'll be asking you about how things get from here to there here in a moment. But first, Paige, if you would kindly timestamp the broadcast. It is Thursday morning. Markets are mostly in the red as we look at our screens today. So remember that this week got chopped up a little bit. We had trading Monday and Tuesday. Yesterday, we had the markets close for the Juneteenth holiday. Back at it for 2 more days. And of course, close Friday evening. So it's a bit of a chopped up week here in terms of trading. What we have at the moment is a red session. So we've got corn down again today. So for those feed buyers here watching the broadcast, we're happy to see where things are trending again, at least this morning. December corn did manage to just touch $4.60 here this morning. It's currently at $4.62, down about 6 cents on the session. We've got soybeans also trading lower. November is down about 8, just under 11.25. We have soybean meal, stubborn little byproduct, also in the red and trading below 350 for both old and new crop proteins. So we've got August. We'll look at August because July will be coming off the board here in a couple weeks. August is at 348 here this morning, and December is down towards 340. It's at 341 at the moment. So again, for us feed buyers, we are happy to see these protein levels down below $350 per ton. So we'll keep an eye on that as we move forward. But Natalie, there's been a lot going on, especially in those protein markets. So what's happening out west in the physical feed markets?
Well, I think out west, we've seen soy meal and canola be very, very tight. You know, I often like to say that we're at the end of the world out here. So, rail logistics play a really big role in the availability of products out here in California. So there have been some bumps in the road on canola trains not moving as well as they should. And then conversely, we've seen some people switch over to soybean meal, which has tightened up that supply a little bit as well.
Okay, so we've seen the physical availability of each of these products start to tighten. And again, perhaps on the future side of your feed pricing at the moment, maybe not necessarily reflecting that, but I think on the basis portion of one's physical feed contract, we've seen that tighten up a lot. We've been talking to folks a lot over the last few months that we'd be hoping to see some of that basis find some relief once a lot of these crush facilities are back in action. But as of late, things remain tight. Natalie, what has been happening in that crush market. I think we had a NOPA report out here in the last few days. Any updates there?
Yeah, absolutely. So NOPA did come out. NOPA is the National Oilseed Processors Association. About 95% of the processors in the US are involved in NOPA. That NOPA crush report came out at 183.625 million bushels. That is up 10.6% from last month and up 7.3% year on year. So that was really, really good to see because frankly, the April number was low. And I think that's part of what caused some of the issues that we've seen with supply being a little bit tighter across the country. So yeah, good to see them back online. I think that'll definitely help alleviate situations as we go forward.
Yeah, and because our export market for meal, for the most part, has remained fairly steady. I mean, we've talked a lot about the South Americans potentially being able to be back online in terms of the export market. The Argentines had a really nice rebound in terms of their soybean production. Again, essentially, this is a very broad statement here, but the Argentines, for the most part, they grow those soybeans, so they crush those beans and export those byproducts. And so be good, at least for a competitive standpoint and the export market, to see their protein availability. And like you said, Natalie, for some of those plants to come offline, we had a really aggressive crushing pace, really starting back in like September. So to see that huge dip in April on those crush numbers, good to see a nice rebound, at least for the month of May, and hopefully for, again, our protein buyers, for that to continue. You talked about these switches from canola to soybean meal because of a lack of availability and those price squeezes there. What's been happening in that canola market that's been affecting that basis?
I think there's a couple things that are coming into play. It kind of all started out with China being a big buyer of canola meal. And so therefore the trains were going to export versus coming to the domestic market. Also, we've heard stories of trains getting loaded to come to the domestic market and just not getting pulled and getting power to start moving to the destination. So there's been some delays there. One of the things that I think we need to keep an eye on as we go forward is the Canadian rail strike. Okay, so part of the slowness and movement has been that the two major railroads in Canada had threatened to strike. They were originally going to go on strike May 22nd. The Canadian Labor Board stepped in and said, we need to review things before you do that. So that review process is still going on right now. However, there was news that came out on Tuesday that the union is again accepting information back on possibly going on strike again. And I believe that collection data goes through the 30th of June. The thought process at this point is that, it probably would be mid-July before anything could happen. That was a statement that was posted on the CPKC railroad site. They're one of the railroads that are potentially going to go on strike. Really, we need the labor board to step in and make a decision. And from there, I believe it's 72 hours after they make a decision that there potentially could be a strike.
Okay, that's a big deal then for North American protein logistics. So, I mean, we're talking about like our crush numbers here in the U.S. We're talking about our meal export market here in the U.S. But obviously our neighbors to the north are a major player in terms of that North American protein availability, but also for the globe, because you mentioned the Chinese are big buyers, at least as of late, of that Canadian protein in the form of canola meal. So if things were to tighten up out there in terms of those rail logistics, that could make things really interesting here domestically in the United States. So we'll have to keep an eye on that. Natalie, before I turn her over to Jake, anything else from your side of things?
If you do have any questions, please reach out to your EverAg team. We'd love to discuss the markets with you and help you get some feed secured.
Excellent. Thank you for that, Natalie. Okay, so Jake, Natalie gave us a lot to digest there. So there's a ton happening in the protein space. And again, I think what we try to achieve here on the feed team is breaking up, that total feed price futures versus basis when it comes to how you're buying your feed. And we've talked a lot with our dairymen about how the basis, in protein has moved at least in a somewhat different direction now as of late versus futures. But what else is happening out there in those physical feed markets around the country?
Yeah, I think one last thing to look at there on the protein side was a little note we had flying around internally this morning. As you're saying, futures have been moving in the opposite direction of basis, and we're seeing some new crop futures numbers that you could manage with some fairly inexpensive option strategies right now. So while we're not getting a whole lot of fun stuff on the basis front, I think there is something to consider on the futures side. We're seeing something of the same thing on the corn front there. I think you said corn futures numbers were down. Those are at some of their lowest numbers that we've seen since middle of April. And you can again come in and get some sort of an option strategy to protect those while they're down and milk prices are up. But then on the basis front on corn, things have been pretty quiet, really. Folks have pretty well wrapped up planting across the Midwest. It sounds like there's still a lot of grain in the bins on the farm. We're seeing nearby basis has been a little bit elevated, and I think that's primarily due to some logistical concerns. We're seeing some new crop numbers pop up here and there in the Midwest. They're right at our targets and potentially setting up to be even better than our targets were there in the heart of the grain belt. And then at the other end of the rail lines, we're starting to see some numbers that are within arm's reach of where we would step in and do some buying. In fact, if we saw futures really drop off and said, hey, let's just get some cash feed bought, I don't think we'd have to see basis do a whole lot of movement from where it is right now to go ahead and step into some of those. I wouldn't miss out on a break to $4 futures waiting on another dime or 15-cent break in basis, I guess is what I'm saying. Natalie's been studying this, but the rail rates for the next crop year are out and they're up roughly 10 cents a bushel. So we've been talking about targets being on the higher end of the old normal ranges at the destination end of these rail lines. And we're getting very close to those. A little bit of activity there on the corn front, maybe stepping into some of those very, very first hedges. And we're also watching some of the other byproducts that tend to follow along with corn and protein prices. Distillers' values have really fallen off. We're seeing some great opportunities to get your July, August, September needs purchased. There may be a few spots here and there that you could get some October, November, December values bought, but we don't have a ton of anxiety to the upside on that product. So I think get what you need for the summer, as the downside movement is going to be fairly limited. And then you ought to be able to put in some decent bids for the new crop window to get started. Gluten and some of the other byproducts that fall in line with distillers are trending in the same direction and warrant, I think, the same approach. And then another one that we've been talking about quite a bit is cottonseed. Still of the opinion that we can be patient there and give that thing some time to come together, let that crop get to growing and see how we're really looking acreage wise here. We've got that report out a week from tomorrow, actually. Then we'll get a look at what we think acres went into the ground. I know there were places just last week still in parts of Oklahoma and the northern part of the cotton patch there that were still planting. I think we'd talked about it a week or two ago that actual cotton futures had fallen off to a great degree where that could have deterred some folks from planting a couple of the acres they had intended. So watching that one, I think we've still got plenty of time there. All in all, we're feeling pretty good about feed values right now. Still not too terribly concerned about them running up and away from us, but there's some opportunity here to lock in some profitability versus some of your revenue on your operation there. So we've got folks stepping in and doing a little bit while we're here.
Yeah, that's exactly right, Jake. I mean, and you brought up a couple of those futures levels. I mean, December corn, we talked about how it touched 460, emphasize it touched it, right? It traded it, but bounced back up from it. So far as we record, it's 10:30 Chicago time, Thursday morning. We have not broken that level. That 460 area, if you go back over the past few months, looking at a December corn futures chart, that's provided some really nice support for this market. So, I mean, we talked to a lot of folks about our overall bearish sentiments on the corn market, but I think we've been stressing that caveat that we're not quite over the hump just yet. 460 has proven to be very stubborn in terms of a downside objective and being able to push through that floor on futures. And if one's wondering maybe what the market is waiting for, given the fact that we are virtually done planting, with the exception of some pockets across the U.S., but are essentially done planting corn. We had plenty, if not too much, moisture, depending on where you sit. We've had some nice sunshine over the last week or so, that's for sure. You know, this stuff has been coming out of the ground very well. Strong emergence, conditions are good. So what's the market waiting for? I think, Jake, you hit it in terms of that report a week from tomorrow. So that's the end of June. Stocks and acreage reports each come out. So that'll show us stocks on and off farm as of June 1st. in the United States. And it'll show us that updated acreage number, updating the end of March projected plantings number with what, to the government's best survey, what we actually have planted up through maybe mid-June, whenever that survey period ends. Maybe the funds or managed money is waiting for that last little step there of, okay, what's that number going to be above or below 90 million acres? Did we end up committing more to corn when we did trade new crop up near $5 mid-May? A lot of folks we think are still holding on to their old crop products, so we'll find out what those numbers were as of June 1st. Then you just got to chop through that July 4th week where, again, you split up a week of markets are closed for that day, July 4th. They reopen that Friday, closed again for the weekend. So maybe a lot of risk on off positioning. But maybe when you get through that stretch, that's when we see that seasonal push and potentially break that 460 floor on futures. But until then, Jake, you said it very well. There's opportunities to step in to some hedges on both new crop protein and new crop corn and see where the physical markets move through the summer. So really great insights there. I think before we let everyone go, because we have a local Californian resident, we should just do a little bit of very high level California trivia. Just a little, nothing crazy. And Jake, you're going to lead us off. What's the capital of California?
Sacramento.
Very nice. That's right. The capital of California, at least according to the internet, is Sacramento. And again, just keep in mind, these answers come from the internet. Please fact check me. I'm probably wrong on a lot of them, but just keep that in mind. These come from the old internet. Natalie, in what year did California achieve its statehood?
1862.
Jake?
I would say 49 because of the
Jake.
49ers, but that's the gold rush.
That's right. That's a great guess. I got 1850. 1850.
Okay.
And so right after that gold rush, they decided maybe we should make this thing a state. I'm assuming that's what folks were thinking at the time. All right. So in what order did California achieve its statehood in terms of Illinois was the 21st state into the Union. Kansas was the 34th. What number was California?
41st.
Natalie?
I'm gonna say 32.
Ooh, Natalie, 31. Excellent guess. Excellent. Yeah, Jake, sorry, man, but California was a state before Kansas, just to show you where things rank here, okay? They were like, you know what, that state way out there, let's let them in before this one that's a lot closer to us. I think, again, that was the mindset. I wasn't there, but I think that's what people were thinking at the moment. All right, what is the state flower of California, Natalie?
Poppy.
Yes! Excellent work. All right, what's the state animal?
I got a lot of possums in my neighborhood. No, I have no idea.
All right, it's on the flag.
Oh, bear.
Oh, the bear?
Yeah, the old bear. All right, what's the state bird? It's the California Valley quail.
Oh,
how about that? The old valley quail. All right, speaking of valley, what are the two river systems located in the Central Valley?
San Joaquin River. Kings River.
Ooh, Kings River. And that is part, supposedly, according to the internet, part of the Sacramento system. Someone feel free to fact check. Natalie, which states border California?
We have Arizona, Nevada, and we have Oregon.
Nice. Very nice. And then, Jake, what's to the south?
Mexico. Baja.
Yeah, absolutely. All right, last one. Jake, 1968, who performed at Folsom State Prison?
Johnny Cash.
Yes, sir!
Okay.
Yeah, boy, that's right. And stay tuned for a different episode. Jake and I will compete on some Johnny Cash karaoke. So stay tuned for that future episode. But in the meantime, excellent insights and great work today, everyone. A huge thanks to Natalie McCarty for joining the show. Natalie, it was great to have you today.
Nice being here.
Awesome. And we'd also like to thank the Everag Insights crew for their support. Thank you to Paige and Lexi for their production magic. Thank you to the viewers for watching the Grain Feed. Contact information is on the screen. We greatly appreciate your feedback. That's all for today. We'll see you next time on the Grain Feed.